key point from the federal budget was its view about inflation, especially with the revelation of those higher than expected energy price forecasts. We're about to hear the latest inflation data from the Bureau of Statistics. Let's bring in our business editor, Ross Greenwood. Ross, of course, 6.1 is the annualised rate and 1.8 last quarter. So they're the figures we had last time. What are we bracing for?
Yeah, what you're bracing for is 7% at least, and the underlying rate of inflation could go to the highest level. Here it is. It's even higher again. 7.3% is the annual rate of inflation, and also you've got the quarterly rate coming in at 1.8%. So just repeating, the rate of inflation is much higher than the markets have anticipated. And what I can also show you very, very shortly is even the Australian dollar, which has all of a sudden jumped back to 64 US cents, already up more than 1/4 cent as a result of this, because this will put more pressure on the Reserve Bank to continue going hard. Remember, it will be meeting on November 1st, Melbourne Cup Day, and it's always said it will not back off from its fight against inflation. But what this shows is that maybe even from the budget last night, where the government's base case is for inflation to peak at the end of this year at 7.75%. But the reality is it also had a worst case scenario where inflation could peak at 8.75%. Now, if that's the case, then you've got higher interest rates for longer, creating more harm for Australia's economy. So in this particular situation right now, we can go to a bit more of the detail. So just repeating, the consumer price index, inflation, 7.3% is much higher than was previously indicated. And the fact of the matter is also that underlying inflation is one of the other keys that will come into this as well. So that could be at the highest level that's been seen since it's been recorded back in 2003 for the very first time. So as I say, it's just going to be fascinating to watch exactly where it goes to from now and how this changes the view. Already, markets had priced in a more than 90% chance the Reserve Bank would raise interest rates by 1/4% at that November meeting. However, now you just wonder whether there might be a bit of a leaning that they could go back to those 0.5% rate rises, Tom.
I think that's probably the real question now in that November meeting. Is it a quarter or is it a half?
Yes.
Whereas before the last few minutes, it's will there be a rate rise at all? Because we've spoken before about the lag effect of rate rises. And there is a
And at some point that they would back off. And,
exactly.
and remember, the budget also indicated there would be 3 more 1/4% rate rises that would go out into early next year. But then it didn't really forecast what happens if that inflation rate stays high. Just one little thing, the most significant contributors to the rise in the September quarter were 3 things. New dwellings up by 3.7%. So that's inflation coming through to the cost of building a home. There's gas, which has been talked about so much. The price of gas in that quarter was up by 10.9%. And also, surprisingly, the price of furniture up by 6.6%. But I have a sense that that is also as a result of the fall in the Australian dollar, because anything that's imported right now is going up significantly in price. But food prices, Coles today said in this last quarter, the price of food had been raised by some 7.1%, which was significantly higher than the previous quarter. But now, overall, the Australian Bureau of Statistics is saying that food was up by 3.2%, driven by meals and also by takeaway food. So the environment here is that inflation is higher than anticipated. That puts pressure back on the government in regards to its own spending commitments, but also onto the Reserve Bank in terms of what happens to interest rates from here.
All right, so over to the Reserve Bank essentially and what they'll do, given this figure, just repeating that news you saw there, higher than expected, 1.8%. That does mirror last quarter, but now you're talking that annualised rate that Ross was talking about now of 7.3%. So, Ross, you'll have more analysis later on this afternoon.
We will indeed.
On this and, of course, all things budget as well. Thank you.